and welcome back to another day with Money, Finance, Freedom, your ticket to financial freedom. Today we're going to be talking about this brand new article that just came out on the Wall Street Journal. Now, that article states that GM is looking to build its second battery factory in the US, and this is absolutely huge news. Now, they are combining forces with a company called LG Chem. Now, this company's stock has been going up and down as of recently, but this combination with General Motors is going to be huge for them. Now, as far as which stock we're going to be investing in, it's going to be General Motors. It's had an absolutely wonderful year, which we'll look at a little bit later in this video, and we're going to look at the current stock prediction price from Yahoo Finance. First, I want to go through this article and let you know how this is going to increase the overall price of this stock over the next year. This is not a short-term play. This is not a 2 to 3 month buildup. This is going to be a year to 2 year buildup of this stock price. And I'm actually looking at around $70 in late 2022. Now, if we go through here, we're going to notice that GM and LG are close to completing a decision to locate their new plant in Tennessee. Now, again, this decision has not completely been made yet. They're still deciding where and when to build this plant. But the good news is that they're pretty sure that the plant will get built eventually. They already have a plant being built for $2.3 billion in Northeast Ohio. Now, the Ohio region has done a great job with car manufacturing in the past. They do have a lot of skilled labor in the area, as well as the supply chains needed to perform car manufacturing. Now, more importantly, they're going to be building batteries in this factory and in the new factory if it gets built. That's what we're most focused on today, and we'll talk about that in a little bit here. Now, if you're already interested in what I'm talking about with you guys here today, please make sure you like and subscribe to the channel, and we can put out more videos like this. Now, as we're going through here, we're going to notice that a lot of the companies in the US don't make their own batteries. A lot of electric or EV companies don't make their batteries in general, but we'll notice that the US is very focused on the supply chain. We're going to see here that the White House last week ordered a review of the US battery supply chain, aiming to lessen dependence on other countries like China. The reason being is China is the leading manufacturer of most battery technology right now. It is then imported into the US. Now, if GM is able to make a sufficient amount of batteries, they're going to be able to lower their battery costs by 40% on all new plug-in vehicles. Now, again, that's on all future models and on all future vehicles. Right now, their current model, which is the Chevy Volt, is using an imported battery. They're not able to produce their own at the lengths that they want to. They want to be producing hundreds of thousands of cars a year, and in order to do that, they're going to need hundreds of thousands of batteries. Now, this is very important at the overall growth of GM. They plan on putting in, as we see here, $27 billion into electric and driverless cars through the mid-decade. So remember, like I said, this isn't a 2 to 3 month play. This is a 1 to 2 year play, possibly a 5-year play as well if you want to stick in with GM for the long term. Now, I've held stock in GM for quite some time now. It's done fairly well in certain years, in some years it's not done very well, but we're seeing an entirely new company here. They're completely rebranding who they want to be and how they want to move into the future. As we scroll down here, we're going to notice that GM's chief executive, Mary Barra, is counting on 30 new battery-powered GM models globally by 2025. So again, we keep seeing this repetition of timeline halfway through the decade, 5 years from now. And what we want to understand is that is the timeline that this stock is going to follow. Now, I believe if this decision to get the second factory built is 100%, if it's completely decided on, if it becomes public knowledge, we're going to see a quick spike in the overall stock. They're basically going to double their battery production for the US. As we know, this is huge, As a North American and a US provider of batteries, they're going to have really good margins. They're going to have really good cost value because they will no longer have to import and get taxed from China. And more importantly, they're most likely going to be receiving contracts from governmental agencies. We've seen in the past, Biden wants to make all governmental cars electric. So that goes from the post office to the motorcade that he rides in, to every single security detail for every president. They all have federal vehicles. We want to understand that that's just a few examples. There are hundreds of thousands of federal vehicles around the US that are not only bought from private companies or public companies, but they're then sold, and then they have to buy new ones every few years because they need to make sure that they're quality vehicles. If they're for security reasons, they need to be able to protect whoever is in the car. But overall, we know that cars are constantly being rebought. So within 5 years, if the entire federal fleet goes from gas-powered vehicles to EV vehicles, we can count on GM being one of the companies to benefit from this. Because of that benefit, we're going to notice that Yahoo Finance has set their 1-year target estimate at $63. Now, this still needs to be updated from the news that came out just today, and we might see that this target estimate moves up to around the $70 mark. Now, Yahoo Finance is generally cautious at their price predictions, so 70 is my point that I'm interested in the future, but we might see Yahoo go into the mid 60s, so $65, $66, $67. I'm looking at $70, $71, $72. Now we're going to notice here in the short and midterm that we have a bearish trend here, and that's because of the buildup over the last few months. But the long term, again, we're in that bullish trend, which is good news. The reason we're in this bearish trend is because over the last few months, since April, we've noticed GM doing really, really well as they've come out with news that they're pushing towards the EV market. Every time we see a new headline come out like this, the stock pushes higher and higher, and the price predictions push higher and higher as well. We're going to notice the volume with GM is always relatively consistent. You're always going to be able to get in and out of your trades. But if we look closer into the last few months, we've started to balance off here a little bit. I believe we're going to see another small spike over the next few days with increased volume, which has been trading down of recently. We're going to see a nice big volume bar show up for us, as well as a few large green candlesticks. Now remember, that's going to be temporary as well. We are still looking for a 1 to 2 year timeline on this stock, so this is going to be one of our long-term hold stocks for the future. Now, that's all I have for you today, guys. Make sure you like and subscribe to the channel. I'll be posting more penny stocks, long-term stocks, and dividend stocks in the future. So, like, subscribe, comment, come back for more. Thanks, guys. Remember, guys, as always, this is not financial advice, just my opinion.